For more on what a contested election could mean for the markets, let's bring in Ian Bremer, president of Eurasia Group and G0 Media. Ian, great to see you as always. I mean, how likely is a contested outcome, do you think?
If it's not a blowout, if it's close, if it's a matter of between key swing states, the likelihood it's going to be contested is very high. Certainly, if Trump loses the election, he is going to say it is rigged. The question is, will he bring Republicans with him, and can they do anything about it? On the former point, we already saw that when President Trump was clear evidence that he was trying to manipulate election outcomes by having the Ukrainian president open a politicized investigation into Joe Biden and his son. Only one Republican in Senate voted to convict. Everybody else said no problem. So, I mean, clearly the bar for Republicans aligning with Trump if he says the election is rigged is pretty low. But then you have what can they do about it? And this is why the pandemic matters. You're going to have enormous moves towards vote by mail, in some cases moving from 5 to 10% of the population to 50% of the population. It's going to be hard for them to pull it off. You're also going to have a lot of people that will try to show up on the day, but the actual numbers of people in balloting stations will be limited. That's going to lead to problematic outcomes, like we saw in the Georgia primary back on June 9th. Now, in many swing states, you have Democratic governors and Republican legislators, Michigan, North Carolina, Pennsylvania, Wisconsin. Those are 4 of the 6 kind of key swing states in the country to determine the outcome. And if it's said to be rigged by President Trump, you could easily imagine a situation where the Republican legislatures actually send one outcome to Congress and the Democratic governors send another. And the judiciary chooses not to intervene because this is a congressional voting issue. So, I mean, truly, it is quite possible. In fact, it's even reasonably plausible, probable, if there is a close election, that it will seem to be rigged and it will be contested. That's not something we've had in our lifetimes, frankly.
Ian, what do you think the likely impact would be on the markets?
I think it would be much more negative than usual because we're going to, I mean, you just had a segment about, are we going to get any more stimulus? Now, I mean, you picked Rand Paul, who, as you said, accurately has been by himself on a lot of this stuff. We feel quite confident there will be another round of stimulus, and indeed more than $1 trillion, probably closer to $2 trillion, because the Republicans are somewhat divided and the House Democrats already passed $3.4 trillion. But as we get closer to the elections, you're going to still need more money. You're going to still have double-digit unemployment. You're going to have massive numbers of businesses that are bankrupt. You're not yet going to have a vaccine that's workable at scale. So if you have a contested election and you don't have a legislature that can function for a few months when you need that kind of money still pumped into the markets, well, imagine what would happen right now if the markets heard there's no new stimulus, no 1.5 trillion, there's zero. Well, now move that forward 3-4 months, play it again, and uncertainty around when Congress is going to be able to actually meet again and with whom. I would say markets would react quite negatively to that outcome.